And Canara Bank, they posted a very good set of numbers in the first quarter. The numbers came better than what the street was working with. Now, their NIMs have come in the highest that we've seen in nearly 31 quarters. Gross NPAs as well, lowest in more than 30 quarters. Corporate loan growth, that's strong, but slippages remain a little bit elevated. To understand what's gone on in the past quarter and what's the way ahead, we're joined by Mr. Satyanarayan Raju, the MD and CEO of the bank. Hi, sir. Good morning. Thanks so much for joining in, and congratulations on a solid showing in the first quarter. My question to you is, what is the loan growth outlook from here on? It seems that it's more focused on the corporate book side because that's outpacing the retail growth side. So the growth from here on, and also on NIMs, it's looking very, very good. CASA has come down, cost of deposits have gone up as well. So how do both those two numbers shape up?
Good morning to you, sir. First, let me focus on the credit growth. The credit growth, we are given the guidance that current year credit growth will be 10.5 minimum. As we given the guidance for the first quarter itself, we could manage that the credit growth is around more than the 13% year on year. Even if you look at the quarter on quarter, it's a more than 3% growth is there in that. The second one, what the composition of the corporate as well as the RAM. Last quarter, we could maintain that the percentage is the 55% is RAM and the 45% is the corporate. Even the current quarter, the growth is in line with the same what we have given the guidance of maintaining the 55% and 45%. Look at that the quarter on quarter growth, RAM itself is more than 3%, sir. The corporate growth is 2.7%. That means that actually our focus on RAM is continuing because to take in higher yields. We want to take that because there is due to the interest expenses, high interest regime, there is a stress on the NIMs margins. To compensate that, our focus on the RAM is continuing. The CASA is as a whole, it's a little stagnated or little negative. But the bifurcation what I wish to share with you is there is a growth in the savings bank account from quarter on quarter. That's the reason behind that is that we have taken a lot of initiatives on the first working day of the current quarter itself. We have launched several new products targeting the younger generation, especially the salaried class. Our existing salaried class customer base is 11 lakhs. Because of this product, new product what we launched on the April 3rd, our new onboarding and from the salaried class.
Right, Mr. Raju. Right, sir. Right, sir. You've given us a fair bit of an overview about how the book is shaping up, and we thank you for that. But, your growth, credit growth is outstripping the deposit growth. So what does that mean in terms of NIMs? Because from a stock market perspective, we'll want to understand what kind of a range we should be working with. Please go ahead, sir. Go ahead, sir.
Sir, our CD ratio was only the 73%. We have given in the starting of this financial year, the guidance is we wish to go for the beyond the 75%. In the first quarter, we could show that there is a more than 74% our CD ratio. When you have a scope to go up to 78% and you have enough liquidity in your system, so naturally our focus will be more on the credit growth compared to that liability growth. The reason behind that is that actually the liabilities we have given in the initial stages itself is 8.5% of the growth in the liability. We are in line with that, and we are sure that we maintain that because ultimately we have to manage effectively the margins on that, and that has given the comfort to us to that under this present high interest rate regime also we could able to maintain our NIM at 3.05.
So I wanted to talk a little bit about the asset quality as well. The slippages amount has gone up substantially this time, almost 3,500 crores. This compares to less than 3,000 crores last quarter. What was the reason for that? And if you can just tell us what is the guidance? I'm just trying to understand, going forward for FY24, what is the guidance on both gross NPAs and slippages? I don't think we can hear him very well.
I think he couldn't hear you, Sonia. I think he was answering the previous question. We'll just have Mr. Raju back with us from Canara in just a bit as soon as we are told. I mean, just to take a quick look at the market in the meanwhile, we're up 28 or 30 points or so, and market breadth is about 3:1 in favor of advances. I think he's back with us.
Okay. Mr. Raju, is my voice reaching you?
Yes, madam.
Okay. I wanted to ask you about slippages because the slippages have gone up quite a bit this time compared to last quarter. What's the outlook on that? Is the asset quality expected to worsen before it gets better?
No, madam. Actually, we have to compare the slippages always based on the circumstances of the first quarter of the previous year and the current first quarter of the current year. We should not compare that the quarter-on-quarter March, because the first quarter generally in the industry, because of that 1/3 staff will be transferred and by settlement and all those things, it's one or 2 months it will be settled down there. The another one is in the first quarter, the agriculture will pay a higher, show a little slippages because of renewals. The sowing season will start only in the June. These two things, otherwise I don't see any concern on the slippages. It's a marginally high in the first quarter compared to that the last March quarter. But when you compare to the first quarter of the last year, the 3,949 to it has come down to 3,428. Whatever the guidance we have given that our slippage will be around 1.3, we are confident that we can manage that 1.3 below than that current financial year.
Okay, so 1.3% slippages for the full year, FY24. What about your estimation of credit costs for the year, sir? Where would that be?
Given actually the credit cost guidance is 1.20, sir. Already we achieved at 1.10. We are expecting that the guidance is a minimum 1.2. We are expecting that around 1.1%. That's not what we are expecting, because we are focused on strengthening our PCR, sir. Compared to that the other things, we have given a guidance that we want to improve the PCR to beyond the 90%. So for that we have to provide additionally to make my balance sheet a future stronger.
Okay. Mr. Raju, just to pick on the earlier point that we were discussing, this new schemes to attract more deposits that you said you've launched immediately at the sort of beginning of the first quarter. Could you tell us, I mean, what is your expectation? How much could this lead to by way of deposit gathering? And also, do you expect a big scramble for deposits? I mean, is it getting harder? Could you give us an overall picture?
Yes, sir. The first, let me speak on the products what we have launched is, one is the premium payroll, one is SB Select, one is current account. These initiatives, and we also has provided API banking launching to the corporates to deal with us, to divert their ancillary business to us. This has given in the first quarter, first 4 months, we got a 3,300 crores in the CASA itself, the accumulated CASA. We are expecting that our entire machinery is focused on that. And from July 1st onwards, we introduced a relationship manager concept to addressing the savings bank customers in the 5,000 branches. I'm sure that with these initiatives, our CASA will be taken a main focus in our approach, and that will take care of our requirement. Regarding the interest expenses and all, this quarter also we see that the same tempo is continuing. We have not seen any softening of interest in the current quarter. We expect that this softening may start in the next quarter onwards once the liquidity in the system is improved.
Mr. Raju, let's talk about some fundraising plans. Do you have any fundraising plans? And what's the plan with the other listed entity? That's Canfin Homes. Are you looking for a buyer, or has that been shelved for now?
Sir, actually the capital, we are already maintaining a more than 16% compared to the peer banks. We are very strong on that. But our board has permitted us to go to the market to raise 7,500 Tier 1 and Tier 2 bonds. 81 bonds is 3,500 crores and Tier 2 bonds is 4,000 crores. And we already got the permission from the board. We will come to the market whenever we feel that the pricing is competitive for us. That is for capital rising. The second one is the Canfin Homes. The Canfin Homes is the Canfin Homes. You see that whatever we have given you, that's we are continuing with that. First, we want to focus on the strengthening of Canfin Homes. We want to see that the value of the company is doubled in 3 years. That is our main focus immediately. So at this juncture, we are not looking at selling our stake. We want to continue with that Canfin Homes till we satisfy that the value, real value, as reflected in the market. So our working is focusing on the doubling the value of that company.
Okay, so you're looking to double the value of Canfin Homes. You're not looking to pare down any stake in Canfin Homes, at least in FY24. Got that? Any other subsidiaries or JVs where you're planning to bring down your stake?
Yes, madam. Actually, our another two major important subsidiaries are Canara HSBC Life Insurance Company and Canara Robeco Asset Management Company. These two are also our key subsidiaries. In that we are holding a 51% stake in both the companies. We already has given an advice along with the other stakeholders. We have taken them into confidence and given a guidance to these two boards to initiate the process of going for the IPO. And they already, both the companies have started their work, but it needs around the 18 months time. We expect that these two companies may come to the initial public offer in the second half of the next financial year.
Okay, all right. That's important information. Thanks a lot for joining in. We've run out of time, not out of questions, but thanks a lot for speaking to CNBC-TV18. Well, that's the word coming in from Canara Bank. The market is very, very quiet. The mid-cap index is doing quite well, though. So on the other side of the break, Amit Dixit of ICICI Securities will join in to review the Q1 performance of Tata Steel and other earnings from the metal space. Later, we'll connect with the management of Thangamil Jewellery to talk about their Q1 earnings as well. Stay tuned.